Wuhan appears full of life once again after resembling a ghost town for months. Mass testing, isolation of patients, and citywide curfews have helped wipe out COVID-19 from the city where it first emerged. That's let businesses reopen here and minimize the economic toll the virus has had on the rest of China.
The economy overcame the adverse impact of the epidemic and demonstrated a gradual recovery.
As a result, the world's second largest economy bounced back from a contraction of nearly 7% in the first 3 months of the year. In the second quarter, it grew 3.2%, beating analysts' expectations. But details revealed by the National Bureau of Statistics show the economy isn't firing on all cylinders. Demand for food helped the agriculture sector grow 0.9% in the second quarter compared to the same period last year. But lockdowns and social distancing requirements took a heavier toll on manufacturing. Its output fell 1.9%. Likewise, demand for services was also subdued. Millions of people were confined to their homes and set the sector back by 1.6%. The government stepped in with $564 billion of stimulus spending. That's been a key driver of economic growth in recent months because officials don't expect a quick recovery in demand from domestic or foreign buyers.
Given the continuous spread of the epidemic globally, the evolving huge impact of the epidemic on the global economy, and the noticeably mounting external risks and challenges, the national economic recovery was still under pressure.
So, the cost of reviving the economy may keep on rising for Beijing until the pandemic recedes. Mobin Nasir, TRT World.
For more on this, Einar Tangen joins me from Beijing. He's a commentator and international politics and economics expert. Thank you so much for joining us again on Money Talks. First of all, during the pandemic, we've heard a lot about V versus U-shaped economic recoveries. Can we say that this is China's V-shaped recovery?
Well, yes, it's looking very promising at the moment, but long term there are real questions because 17% of China's economy is dependent on exports, way down from where it used to be. But at this point, global demand is not where it is. Although there are really some very nice hotspots, Melinda. If you start looking at bicycles, amazingly, that has just tripled in terms of exports. Everything from yoga mats to anything to do with home health. A lot of that is made in China. So there are some bright spots, but long term, there's real questions about how this can be sustained.
That's a really interesting point. I hadn't thought about things like yoga mats and bicycles, but there is such a big demand for those sorts of things at the moment. Will that make this rebound, though, sustainable in the long term? Because it's not all good news. Domestic retail figures are down.
Domestic retail figures are down, and so is investment. But this 3.2% growth is going to go a long ways towards instilling a little bit of confidence in the Chinese consumers, because they look around the world and they see that China has actually seemed so far to have handled the COVID crisis on the health side very well, and they're now extending that to the economic side. Remember, so much of our economies are dependent on how the consumers feel. China is a place where there's a tremendous amount of savings. So the ability to spend is there, and we're seeing that in terms of the movement of things from the savings in banks and things like that over to the equities market. You've seen a huge increase in the number of people who are investing. The stock markets are rising. That signals confidence.
When we're reading commentary about these figures today, some economic analysts have raised questions about the veracity of China's financial reporting. Do you think these figures stack up, and why do people have a question mark sometimes?
Well, I think anything that comes out of China is always, questioned. People seem to have this idea that somehow the Chinese government doesn't want to tell you the truth. But, if that was in fact the case about these economic numbers, you wouldn't see the Bank of China issuing that they think that they're back to normal, that they're not going to be putting in any fiscal or stimulus, very big fiscal or stimulus measures, and that they will just doing this prudently. If there were fire alarms going off and when they were hiding data. You would see a lot more action on, internal reserve rate ratios for banks, for example, lending facilities, this type of thing. And at this point, the government has really kind of pulled back. There's an expectation that they'll be driving the economy through targeted infrastructure projects and things like that. That's more to come. But I think that's more to do with creating this 9 million jobs that they've targeted.
Einar Tangen, always good to have you breaking it down for us. Thanks for your time on Money Talks.